So there's a lot of people that buy into the rhetoric of the Fed and say, they are doing the right thing and interest rates are probably higher than I want, but they'll bring them down at some point. And they don't understand the dynamics of what happens at the end of a great currency crisis, which we're facing. But they'll learn that lesson. And many will learn it probably too late because when the run to gold goes from the walk that we're at now to a full out sprint as a metaphor, when it accelerates as we go parabolic on the price of the metals because the currency is falling so fast, it's a hard time to get out.
The London Bullion Market Association has released its 2023 annual precious metals forecast survey, with analysts predicting growth for gold and silver in the year ahead. The survey features 30 experts' predictions for gold and silver prices, showing cautious optimism. On average, they expect gold and silver prices to rise by 3.3% and 8.8% respectively by year-end. The Morgan Report, a prestigious wealth publication, is authored by David Morgan, a renowned hedge fund consultant in the precious metals sector. Morgan predicts gold's rapid safe haven shift, driving a sharp price surge by year-end. He envisions gold resurging as a crisis currency, backed by central banks, emphasizing its vital role amid banking crises. According to the World Gold Council, the bank's activity underlined and clarified the continuing trend in central bank gold demand. Gold's traditional status as a safe haven asset has seen its price briefly break through the $2,000 barrier on a number of occasions during the first few months of this year. The collapse of Silicon Valley Bank, combined with the forced takeover of Credit Suisse by UBS, in particular, led to investors piling into gold as they looked for stability. Morgan talks about Paul Volcker's forceful interest rate increase that weakened gold. Hence, although the gold prices in August 1987 were higher than in August 1979, the 1980s and 1990s are generally considered to be bearish for gold, partially due to the Volcker's actions. In 2000, the price of gold was at its lowest since 1990, with a troy ounce of gold costing $274.5 in that year. Since then, gold prices have been rising, and after the economic crisis of 2008, the price of gold rose at higher rates than ever before as the market began to see gold as an increasingly good investment. Now we are presenting you the glimpses of David Morgan insights from his recent interview with Silver Bullion TV. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
If we repeat what we've done many, many times in history, no guarantee it'll happen again, but it's very likely it will. We'll see gold as the money of last resort. The bankers are already front running the situation. I mean, I've talked about the run to gold over a year ago, and I think, one of the first to say it. And of course, many people that look at my work see it just from this perspective, and they don't get into the paid version, don't really might not buy into it, because even though central banks are buying gold at a higher rate than they ever have, it doesn't show up in the gold price. We're still hovering around 2,000 or lower, but that doesn't matter at this time because it's not a function of price alone. It's a function of requiring gold to be the money of last resort if and only if the banks fail, meaning, and they are some are failing, that the trust is lost, confidence is lost, people give up. And I think we will face that. It's always happened in the past. People tell me the dollar will never die. I agree that it won't lose all its value, it won't go to zero, but the new system will be implemented as they are testing now with the Fed Now program. And so I had a really strong bias into what would happen in the future. And me and many of us thought, we had maybe 10 or 20 years before we'd have some kind of upset. We really had one in 10 years with the, screaming inflation in the United States, officially 13%. And then Volcker came in, smashed down the gold market by raising interest rates well above the inflation rate. You're getting like a 7% real return on your money. And that just quashed the gold and silver markets for like 20 years. And so we had really a 30-year reprieve before gold bottomed at 252 in the year 2000. And then we've had a bull market since, although it's been pretty erratic. It was up 11 years in a row from 2000 to 2011, September. And then from there till now, it's made a great big bottoming pattern. It's called a cup. It's gone kind of in a U form. And now it's trending sideways, ready for a major breakout. And the cup and handle is a very strong formation. So I expect gold to do what I've always said, which is really outperform other asset classes once we get into the third leg up, which I think is, I won't say imminent, but I think it'll start before the end of this year. Rather surprised with the economic conditions being what they are, but right now I think we're in a pause. I think a lot of people that are awake and know what's going on don't know what to do. So they're doing nothing. They're keeping their bank, their money in the bank. They're not buying gold. They're not buying silver. They're not buying stocks. They're not going to change their real estate portfolio. They're just, static. Nothing's changing. And that's not a bad place to be. But there will be a time where they'll need to reallocate. And that's why I'm so bullish on the metals. I know you asked me to give out my information, but I have to add this to the end. Right now, there's about $5 trillion sitting on the sidelines. That's a lot of cash. And 1% of that is $50 billion. And $50 billion represents 2 years worth of silver supply. So if 1% of the cash got scared and saw, what we talked about, confidence and trust, mistrusted the system, 1%, that take up 2 years of the silver supply. So where do you think the price of silver could go?
During the interview, David Morgan discussed the Brics currency potential role for trade between nations, while stating that adoption of such currencies is complex. The Brics countries have been pursuing a wide range of initiatives to decrease their dependence on the dollar. Over the past year, Russia, China, and Brazil have turned to greater use of non-dollar currencies in their cross-border transactions. Iraq, Saudi Arabia, and the United Arab Emirates are actively exploring dollar alternatives. And central banks have sought to shift more of their currency reserves away from the dollar and into gold. Morgan talks about cashless society, while he doubts CBDC's prevalence. Over 60 countries are progressing with CBDC implementation, but none are pursuing digital bearer instruments. And in case there was any doubt, Christine Lagarde, president of the European Central Bank, emphasized that CBDCs won't support anonymous cash-like transactions. Let's get back to interview.
Well, initially, nation-to-nation settlement, definitely. It won't be for the people. It would have to be convertible to gold in order for it to resonate with the people, I believe. And, I'm not going to read you the whole report because even though, I wrote and edited most of it, it's just, we don't think it's as big a deal as a lot of people do. I mean, it is a, countervailing force, but there's also, coming back to our initial, discussion, it's a trust issue. And even though they've got, the BRICS in Saudi Arabia, so it's the BRICS, Brazil, Russia, India, China, South Africa, and Saudi, and 20 others that are lined up. There's trust issues between those countries. There's customs, there's work ethics that are different, there's different holidays, there's all this stuff. So it's not as easily adopted as some of our deep thinkers have already indicated. So I think I said enough on it. I don't see I see a possibility where all of this arrogance that the central bankers have and their ability to control and their ability to keep their power and control through the monetary system may be much more fragile than they think. And I just want to point out a few things. I'm going to put a little document over so I'll be reading here because I don't want to miss the exact numbers. But the Pacific, across the Asia Pacific, cash is used for 16% of all sales. Thailand uses 63% cash for sales. Vietnam, 54% for all sales, and Indonesia, 51%. So these nations are really used to using cash for over half of their payments. In Europe, cash accounts for 26% of all cash of all payment. Norway is the lowest level of 4%. Spain is about 50%. In Latin America, cash is the way to pay 28% of the time. And in the Middle East and Africa, they use about a 44% cash basis. North America, about 11% cash basis. So that's an important set of factors that I wanted to get out there on your show to let people know that there's a lot of people in the world that use cash still, and to go cashless, is not going to be as easy as, some indicate. And I'm one that's indicated we're going cashless. But I've actually said, I want to say it again, there's no guarantee we're going to CBDC. I mean, we could go where the system fails and it's basically chaos in quotation marks, where maybe some banks are closed and you go to cash only, meaning, physical notes is the only thing that's trusted. And it could get out of their control, in other words. I mean, there could be a systemic risk through the banking system where the banks stop trusting each other, which is exactly what happened in 2008.
While central banks and nations explore new pathways, gold's intrinsic qualities serve as a timeless reminder that fundamental truths endure in the face of modern finance complexities. As monetary systems evolve and digital currencies rise, what lies ahead for gold's role and relevance? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel and turn on notifications. Thank you for watching.